the Doc and Eric Dubin with the SD Weekly Metals and Markets Wrap. Well, Eric, it's been another tough week for the metals. Big sell-offs in both gold and silver, and we saw it culminate into the close here on Friday. Silver, after really spending the past 24 hours trading right around the $15 level, was hit back under 14 and closing the week under 15, or I should say under 15 at a 14 handle. So closing the week in the 14s. In gold, was hit all the way today back to the entire bear market correction lows at 1130. It bounced off there a little bit, but not really convincingly by any means, closing the week near the lows just off of 1130. So start out with the trading action. What's your take on that here, Eric?
Well, it's pretty depressing to see all this. I mean, back in Tuesday when we had that big crash down, that smack was pretty hard and brought us back to beginning to test the earlier lows that we saw in June. And I'm speaking about silver, of course. And then, today we get this goofy announcement from China talking about, raising their gold holdings to 1,658 metric tons, which is just a complete joke. I mean, China pulls 400 metric tons out of the ground just in mine supply alone that goes directly to the central bank. The central bank is the buyer. That's over 1,200 metric tons of additional gold buyings since 2009's declaration of 1,054 metric tons. Clearly, they wanted to put out a number that wouldn't upset any financial market participants, but this number is so ridiculously low that it undershoots even the conventional finance world's estimation as to what China would be putting out for public consumption just to do the kabuki theater. Well, I shouldn't say kabuki theater since we're talking China, but the song and dance thing that they do all throughout this whole year in preparation for the SDR basket negotiations. And I got the month exactly right. Earlier this year, I was talking about July being the prime, most probable month when they would make this declaration, and indeed they did, but this number is so shockingly low that there's got to be some strange stuff going on behind the scenes, and I've speculated that it's possible that maybe the United States put more pressure on China in exchange for possibly giving them the hint that the United States would be even more amenable to the SDR basket, opening up to have the renminbi included in it. Who knows? I don't know. But that, combined with the way the media is reporting this Greece situation, and you got to hand it to the powers that be that have been able to, throughout this whole month, manage to create expectations and prove those expectations that the turmoil that would grow out of Greece would be nothing, that the market spillover from China's 20+% correction on their big bull market move. I mean, they had something like $2 trillion worth of equity capital go up in smoke in China. That's not a trivial number. When we've seen this pattern many a time when the normal economic fundamentals that would justify higher gold and silver prices manifest in the financial markets, in fact, the manipulation level steps up harder and harder and harder. And I'm not just saying that from an anecdotal observation point of view. 2015 has had a lot of very transitional, high turmoil potential catalysts come. This whole Greek saga has been in hyperdrive for the entire year. This whole possible scenario of the Ukraine falling apart economically, which could conceivably lead to warfare at a much higher level than what's going on now, because basically you'd have an escalation in the civil war factions there that could conceivably pull in Russia. I could go on and on. There are reasons why 2015 should have been far more tumultuous than 2014, but in fact, what did we see? The last quarterly reporting for derivatives for J.P. Morgan and for Citibank, I mean, their level of cornering, the formal term that they use in future markets and commodities markets in general for manipulation of the markets is off the charts. I mean, the amount of derivatives exposure that Citibank had in silver went from, all precious metals in total, silver, gold, etc., went from, I'm doing this totally off of memory, but it was around something like 5 billion or so, 5 trillion or so notional value, and went up to like 60 trillion or something, or 55 trillion. I mean, that kind of magnitude of shift of notional exposure to precious metals derivatives clearly shows that they're almost an order of magnitude, like 10 times more active in the marketplace. And that's happening because they're participating on the manipulation of naked shorting. And it's really hard to see how the market's going to break away from this kind of control when we go through periods like in the last couple of weeks when lockdown has been total, and we're even able to, see the cartel kick the legs underneath silver such that it was able to, fall into the 14 handle on Tuesday. So I don't know. We're going to talk a bit about what's going on in the physical market, and that should kick in to support the market right now. And it has supported it before, but like last Tuesday, when there's a desire by the powers that be to really kick the crap out of the precious metals, they're still able to do it because the paper market is so much larger than the physical market. But let's chat about the physical market. Let's tell our listeners and readers about what you're seeing on the premium front and delivery pushouts and stuff like that.
Yeah, in the physical market, demand really has exploded, and we're seeing it's not just the first signs of shortage, we're seeing widespread shortage. Again, as we talked about last week, it started with the Silver Eagles and the U.S. Mint's announcement that they were sold out and not taking orders until around the August time frame. And again, once that happens and they resume production, they're going to be allocating coins, and none of the authorized dealers have any idea what type of numbers they're going to be able to purchase. So it'll be a couple of weeks yet before people find anything out about that. And from there, it has cascaded throughout the market. I was just chatting with Eric a little bit before the show. We're seeing things that we didn't even see in 2013, or really haven't been seen since 2009. 90% silver is pretty much no offer across the wholesale market. Even a lot of the 100-ounce bars now, such as Johnson Matthey, a lot of the authorized distributors and wholesalers are no offer, meaning they're not selling any 100-ounce bars. They're not even taking any orders. Silver maples, a lot of the dealers, premiums are rising rapidly, multiple week delay for wholesale orders. And the Sunshine Mint, the mint that mints the blanks for the Silver Eagle program, their rounds and also the 10-ounce bars, new orders today are shipping September 10th. So you're talking about, what's that, 7 or 8 weeks out. And we didn't even see that in 2013 when we had the big smash in the metals. We haven't seen those types of delays since 2008. We haven't really seen the types of premiums yet that we saw in 2008, but I think a lot of that is due to the fact that a lot of the major retail bullion dealers panicked and bought everything they could last Tuesday when we saw the big smash, and they're working through inventory right now. Like, for example, Silver Eagles across the retailers, they're selling them for around $340, $350 over spot at a box quantity, monster box quantity. But a lot of the authorized distributors are offering coins at close to $4 now, so even higher than the retailers, which tells me that once all those coins are worked through that were purchased in a panic last Tuesday, premiums are going to go higher. Now, we certainly have a ways to go before we see the types of premiums we saw back in 2008, when I personally recall Silver Eagles premiums were over 100%. When silver dipped down around $8 or $9 an ounce, Silver Eagles were still around 15 to 17 bucks an ounce. And at that time, I remember even a 1,000-ounce silver bar was about a $4 an ounce premium, and 100-ounce Johnson Matthey bars were on about a 6-month production delay. So we've got a little ways to go, obviously, before we see those types of shortages. But the paper markets look like they could be ready to make things interesting. And if that does happen, it certainly would not surprise me, like I said last week, that we would see the type of shortages and the type of premiums we saw back in 2008, 2009.
Yeah, and, reflecting on the industrial purchases that hit the 1,000-ounce bars, it's a little different this time around because it seems like we do have tighter inventory even on the 1,000-ounce bars when it comes to the amount of silver that's being imported into the United States. And SRS Rocco report does a lot of good work on that. And then when you look at what's going on in India and the huge importation that's going to at least 33% of the silver being purchased going straight towards the rollout of much larger solar panel infrastructure. maybe this is going to be a little bit different than what we even saw in 2008 if this nonsense continues with the constant paper raids pushing price down to the point where the industrial buyers will be stepping in and pushing prices up higher sooner rather than what happened in 2008, because a lot of people criticized people talking about shortages when it was largely a retail product phenomenon in 2008, at least for a good two-thirds of the time at which we saw elevated premiums and pressure in the physical market and whatnot. But who knows? This time around, there might be a little bit less slack just because of the amount of silver that has consistently been pulled out of above ground supply vis-a-vis what's being consumed both by investors and the industrial demand. I mean, we pulled out 1 billion ounces worth of silver. We pulled out 800 million ounces worth of silver out of the ground every year and consume about 1 billion. And that deficit has been going on for years, at least 7 years, something like that. It always gets back to how long a market can ignore fundamentals and how long the cartel and the powers that be can continue to spin reality. And their efforts and the fruits of their labor are indeed prodigious and amazing what they've been able to pull off. But at some point, this has just got to give. I mean, miners can't operate by losing money and as charities forever. And even though the majority of the CEOs in the precious metal space are just complete numbskulls when it comes to their either A, inability to understand and perceive this manipulation going on, destroying their business, or B, just being chicken shits and not standing up like outstanding CEOs like Keith Niemeyer at First Majestic. So, I don't know. It's really, to be perfectly blunt, this is very depressing to watch, and there's really no telling 100% with 100% certainty when this is going to end. That's really the bottom line. I mean, maybe there's a scenario out here that the powers that be can continue to extend and pretend and manage to put out false data to the point where people believe the economic turnaround has happened in the next couple of years or whatever, and the normalization of interest rates are possible, and they are able to push gold down even further before reality steps into this fake construct that they're putting out and changes prices. At some point, that's going to happen. At some point, the gold and silver market, bull market, is going to rise in earnest, and people are going to recognize it as such. But right now, and just as an experiment, I can ask our listening audience, how many of you out here think that this whole Greek thing is done? I mean, that's the message that is delivered by the powers that be through the vast majority of the media coverage, but the reality is that all that has been agreed to is a 7.8 billion euro bridge loan, so that it's more vendor financing, and the some 86 billion euro third bailout package. The overall package is something that's still remaining to be negotiated. They've talked to various parliaments. The German parliament has approved a general agreement to go forward with the parameters as outlined by the negotiation. Austria has as well. The Greek parliament voted yesterday. But the reality is that it's not a done deal yet, and they have to work out what's going to be the final status when it comes to possible haircuts and debt forgiveness for Greece. I suspect that that's what Tsipras has done, in that he is operating with the assumption that at some point during this negotiation for the third bailout, that Greece would acquiesce to some kind of a haircut on the debt. And that also being buttressed by Christine Lagarde at the IMF, going on the media more frequently, and as recently as this morning on Europe 1 radio in France, saying that, and I get the quote here exactly, I don't have the quote in front of me exactly, but she basically said that it would not be advisable and doable for the IMF to participate in the third bailout program were there not to be German support for easing of the debt. And at one point she even said that the IMF would still participate in the agreement, but they're splitting hairs in the way in which these negotiation positions are talked about with various parties. So I don't know. I think that the same scenario I outlined back in June 20th is what's going to ultimately happen. It's just that there's been a change in the disparate attitude in the Syriza party in Greece overall, in that they're willing to go against the referendum and go against the general mandate that they had that got them elected in the first place. And as we go forward, it's a high probability that negotiations will fail, that the government will lose its level of confidence, and that there will be new elections. And sometime in the next couple of months, we might be right back where we started from in terms of this ongoing. Parties have made an agreement, parties have not come to an agreement, and this flip-flopping I don't think is over yet. And part of what may be pressuring precious metals at this point is the fear trade diminishing to some extent, but the lion's share of what's going on, at least earlier this week, certainly was manipulation. This morning we even have a pretty big dump in terms of 2,596 gold contracts were dumped at open on COMEX this morning. That represents about 7.5 tons of gold, paper gold. And some of that may be related to a trader fearful about what's going on with China and this low number that they announced, but more likely than not, it's the cartel. And these kind of shenanigans are going to be with us for a while. I mean, we have stronger demand coming from India later this summer, tied to their jewelry buying cycle for the holiday seasons and the wedding seasons that they have. And maybe that'll be a catalyst that'll spark up more demand in the physical market, such that it'll put a bid underneath the declining prices that we're seeing now. It's really hard to imagine prices getting much lower than where they are now, but who knows? I mean, the cartel proved themselves on Tuesday and Thursday that they definitely were willing to beat the snot out of silver and push it down.
I want to touch on one other thing with regards to Eric's comments that on the wholesale, the supply side, silver might even be tighter than it was previous shortages. And that's something that our friend Craig Hemke from TF Metals Report has discovered this week here. In silver, on June 29th, the total number of July 15 contracts that were still open was 2,699 silver contracts that were still open on options expiration. And with still about 2 weeks to go here in July, the CME data shows that nearly 3,300 total deliveries have been made. And there's still quite a few contracts open. What that means is that more people have stood for delivery than there was contracts open on options expiration. That means about 3.5 million ounces worth of silver this month basically jumped the queue that they wanted immediate delivery of silver and ponied up 100% margin to come in and take July delivery. And that's nothing I've seen happen before. Usually those numbers of those contracts still standing open at expiration, if you're lucky, maybe 70-80% might stand for delivery. I've never seen more contracts stand for delivery than were still open when the contract expires. Have you, Eric?
70-80% is like unbelievably rare at that. I mean, the vast majority actually, more often than not, do not stand for delivery. So, no, to answer your question, I've never seen anything like this. This is kind of, it's prima facie evidence that there's definitely something weird going on in the silver market, in the physical market, and that a lot of people want to scoop up these bargains.
Yeah, it'll certainly be interesting, and I would expect those numbers to even rise here. I mean, we still got 2 full weeks of trading left in July, and we've got bona fide tightness and shortages going on. Sure wouldn't surprise me to see those numbers jump quite a bit. So it'll be interesting to see what happens as we head towards August. Well, Eric, before we wrap up the show, why don't you break down the numbers for the listeners a little bit further about the Chinese accumulation of gold numbers versus today's announcement of, about 604 metric tons?
So just to paint a picture as to what's going on, obviously the 2009 declaration of 1,054 metric tons was a considerable underestimate at that. And China has had a pattern of not making declarations until they feel the most advantageous point for them to do so without moving the gold price up, because they want to buy a lot more gold. In 2013, they had made a declaration of 600 metric tons versus 454 metric tons that were held. So we went from 600 metric tons in 2003 to 6 years later in 2009 they went to 1,054, and now we're supposed to believe that we are now at 1,658 metric tons. I already mentioned the mine supply addition of at least 1,200 metric tons. But on top of that, we have the withdrawals that come out of the Shanghai exchange, and those are running at like upwards of 2,000 or 1,500 metric tons, give or take, for most of the years between 2009 and today. So, I mean, to think that China could even conceivably pull the wool over the eyes of the conventional finance world, never mind people who are looking at a much bigger picture, is just ludicrous. And so, there's got to be something going on here that speaks to their SDR basket strategy, and I think basically what happened is that they've changed the way they're negotiating vis-a-vis the United States. It probably is that they have decided to make nice with the United States and announce a very, very low number in hopes that there's some kind of an agreement that can be made, rather than going the opposite route of trying to announce a number that was large enough to inspire people to have greater confidence in the renminbi as a reserve currency, or as a burgeoning reserve currency. When we first started talking about this, I figured that, well, logically they would most likely want to get something that's close to Germany or above Germany, but not so much so. So, 4,000 metric tons or less was what I was estimating that they would announce. Bloomberg came out with 3,500 metric tons earlier this year as their estimate. And, there's very few people in the regular financial world that had anything as an expectation below 3,000. So this is just so over the top, so loony bin in terms of a number. I mean, anyone who pays any attention to the gold market, never mind someone that is in the alternative finance space. I mean, even the GMF, FES, and World Gold Council, and those people were looking at 3,000 plus. So this is quite a shocker, and a little bit of a head scratcher is to try to figure out exactly what their strategy is. But it certainly doesn't. I don't think that they actually sat around on their hands and then decided sometime, this week, okay, we're going to announce it now because gold's down and we want to push it down further. I know that there's some speculation out there amongst people in the gold bug community that that's what's going on. And typically, policy is not quite as spontaneous when it comes. In particular, the Chinese are very much known for long-term planning and whatnot. So I don't think that that's what happened this week. But from a bigger picture, there certainly is some kind of shift going on when it comes to their overall strategy vis-a-vis the West, and they most likely are just trying to buy more time. Maybe they're even considering that if they do not get SDR basket inclusion this year, that they just won't care, and that maybe that's the take-home message and analysis that one can draw from this rather shocking low number. Who knows? I mean, they're going to be able to build out their infrastructure when it comes to the Silk Road and the AIIB and the BRICS Development Bank, now named New Development Bank, and on and on and on. And all the currency swaps are now probably around 30 of them in terms of bilateral swaps with individual countries. So, China's doing all well and fine when it comes to building the infrastructure for the next 100 years and their eventual rise to currency reserve status, and ultimately probably even world reserve currency status in excess of the United States dollar's position. So anyway, it's definitely very interesting news this week, and we'll continue to dig and try to figure out all the details as far as what it means, and come back next week with more analysis.
And next week will certainly be interesting. It'll be interesting really starting with Sunday's Globex Open, with gold closing the week here right at the bear market support lows at 11:30. Certainly hope not, but things could get interesting quickly if that level is breached to the downside.
Yeah.
And if that does happen, it certainly is possible that you could see that entire move from 1,000 to 1915 wiped out, and that round level support that people have been waiting about for a while tested. Personally, I believe if it did happen, it'd be very brief, and that would likely mark the end of things. But I'm not saying it's going to happen, but certainly could, especially on the paper side. There's a lot of stop-loss triggers below 1130.
Yeah. But in the good news, Bloomberg's headline today about China is China ends mystery of gold hoard. So I'm glad we got that all cleared up. Thanks, Bloomberg.
It's all cleared up. All right, so on that note, we'll wrap up this week's show here. For the Doc and Eric Dubin, thanks for tuning in to this week's SD Weekly Metals and Markets Wrap.